The main reasons for Mitsubishi UFJ Financial Group's profit drop in the first quarter of 2022 were one-off losses linked to the sale of Unit MUFG Union Bank and a drop in the value of its stake in Grab Holdings. Mitsubishi UFJ Financial Group, or MUFG, is Japan's largest lender by assets and owns about 22% of Morgan Stanley. In August 2022, it announced that it would sell its retail banking unit, MUFG Union Bank, to Bancorp for $8 billion. This deal was part of MUFG's strategy to focus on its core businesses and reduce its exposure to low-margin markets. However, before the sale could be completed, MUFG had to book an appraisal loss of 254 billion yen, $1.9 billion, on bonds and other assets held by MUFG Union Bank. This was an accounting treatment required to reflect the fair value of the assets before the sale. This loss alone accounted for more than half of MUFG's net profit decline in the first quarter. Another reason for MUFG's profit drop was a 43.2 billion yen, $329 million, write-down on the value of its stake in Grab Holdings, Southeast Asia's biggest ride-hailing firm. MUFG invested $706 million in Grab in 2020 as it sought growth opportunities in emerging markets. However, Grab's share price has fallen since its merger with the Special Purpose Acquisition Company, SPAC, in April 2022 due to regulatory uncertainties and competition. These two factors combined resulted in a 70% plunge in MUFG's net profit for the April-June period, from 383.1 billion yen, $2.9 billion, a year earlier to 113.7 billion yen, $869 million. This was despite a strong growth in net interest income, which is money earned from loans and securities above their costs of funds. MUFG maintained its full-year profit forecast of 1 trillion yen, $7.6 billion, which is still a 12% drop from the previous year when it posted a record profit. The bank said that the one-off losses would be partly offset when the sale of MUFG Union Bank is completed later this year, and that it expects a recovery in its overseas business as the global economy recovers from the COVID-19 pandemic. One of the factors that contributed to Mitsubishi UFJ Financial Group's profit drop in 2020 was the decline in net interest income, especially overseas. Net interest income is the difference between the interest earned from loans and other assets, and the interest paid on deposits and other liabilities. It is a key source of revenue for banks. According to its annual report, Mitsubishi UFJ Financial Group's net interest income decreased by 5.8% from 2.5 trillion yen in 2019 to 2.4 trillion yen in 2020. The main reason for this decline was the impact of lower interest rates in Japan and overseas, as well as the appreciation of the yen against other currencies. However, there was one area where net interest income showed strong growth: overseas loans. The annual report states that overseas loans increased by 10.1% from 55.6 trillion yen in 2019 to 61.2 trillion yen in 2020, mainly due to higher demand from corporate customers who sought alternative financing sources amid the COVID-19 pandemic. As a result, net interest income from overseas loans increased by 11.8% from 1 trillion yen in 2019 to 1.1 trillion yen in 2020. This means that overseas loans were more attractive than debt market financing for some customers, as they could benefit from higher interest rates and more flexible terms. This also reflects Mitsubishi UFJ Financial Group's strategy of expanding its global business and diversifying its revenue sources. Therefore, while net interest income overall declined for Mitsubishi UFJ Financial Group in 2020, it was partly offset by the strong growth in overseas loans, which proved to be a competitive advantage for the bank in a challenging environment. Mitsubishi UFJ Financial Group, or MUFG, is Japan's largest lender and one of the world's biggest banks by assets. The banking group has been facing challenges amid the COVID-19 pandemic, low interest rates, and geopolitical uncertainties. In May 2023, MUFG announced its financial results for the fiscal year that ended in March 2023. The bank reported a net profit of 1.12 trillion yen, which was a 12% drop from the previous year when it posted a record profit of 1.27 trillion yen. MUFG also issued a profit forecast for the current fiscal year that ends in March 2024. The bank expects to earn 1.3 trillion yen in net income, which would be a 16% increase from the previous year and a new record high for the bank. However, this optimistic outlook is not without risks and uncertainties. MUFG faces several factors that could affect its performance and profitability in the coming months. One of these factors is the possibility of a recession in the EU, which is MUFG's largest overseas market. The EU economy has been recovering from the pandemic-induced slump, but it also faces inflationary pressures, labor shortages, and supply chain disruptions. A slowdown or a contraction in the EU economy could hurt MUFG's earnings from its American operations. Another factor is the ongoing war in Ukraine, which has escalated into a major geopolitical crisis. MUFG has exposure to Ukraine through its subsidiary Bank of Tokyo Mitsubishi UFJ, BTMU, which operates branches and offices in Kiev and other cities. The bank also has loans and investments in Russia, which is involved in the conflict. A further deterioration of the situation in Ukraine could result in losses or impairments for MUFG. These are some of the challenges and opportunities that MUFG faces as it aims to achieve its profit forecast of 1 trillion yen for the current fiscal year. The bank will have to navigate through a complex and uncertain environment, while also pursuing its growth strategy and digital transformation.